Moving on to a special segment, Profit Intelligence. Today we're looking at a comparison between two cement companies wherein you have Ultratech Cement, which is one of the top losers on Nifty 50 versus a Shree Cement, which has got a good target price from a city yet again. Puneet joins us with all the details. Puneet, over to you.
Well, thank you for that. So the latest trigger is definitely, the note by City on Shree Cement. They've maintained a target price of 35,500. Three key points they've made in the report before I move on to a comparison with Ultratech Cement. Management largely remains optimistic on the second half recovery. They've roughly, the estimate is that 17 million ton of cement has already been sold. They are looking to, do a similar number in H2 of FY26. Possible increase in private capex as well as a cut in GST rates from 28 to 18% should be a demand booster, is what the brokerage affirms. And finally, a very interesting point, this is the first one which has actually come across and said it, that the region of East India, where Shree Cement is a stronghold, post Bihar election or just tad before that as well, could see a higher and a faster growth compared to the northern as well as the southern region of India. And, the analyst has, stuck out the neck and said it because the eastern region hasn't actually performed in terms of growth, especially in this particular time frame. When you look at the management guidance, and here is the key one, they're expecting 37 to 38 million ton of cement to be sold in FY26. They've reaffirmed their guidance of 80 million ton capacity by FY28. It's a steep ask, doubling capacity essentially. The capacity currently is between 50 to 55 million ton with overall sales and utilization hovering at 75%, but it's a steep ask to go all the way up to 80 million tons as well. Capex will be roughly 4,000 crores over the next 3 years. That's an annual number. So they will be continuously investing in increasing the capacity to the number which we mentioned. Now, what do brokerages actually anticipate in terms of growth compared to Ultratech Cement in the next year, FY26 specifically? Revenue growth for Shree Cement is expected at 12%, while Ultratech will have the higher boost at 17%. But EBITDA growth will also be the same for someone like an Ultratech at 26%, at 28%, pardon me. The EPS growth will be 28% for Shree versus 30% for someone like an Ultratech Cement as well. Finally, in terms of valuation as well, do they stack up? In terms of buy calls, Ultratech does have 82%, analysts covering the stock, giving a buy recommendation. The return potential is also significant at 10.7% versus about 4.9% for Shree Cement. And in terms of EV and EBITDA, largely neck and neck in terms of valuation. So the key aspect for Shree is the stock hasn't performed that well in the last 3 to 4 years. So the growth aspirations is strong. The company is also refrained from any kind of much acquisitions compared to Ultratech, which has done Kesoram as well as India Cement. So they are looking to boost capacity to 200 million tons. But that's for our profit intelligence segment. Putting the focus on Shree Cement, that will be the one to watch out for. H2 will be the biggest area for growth essentially for Shree Cement, leading up to FY28 when the capacity is expected to reach 80 million tons.
Okay, Puneet, thank you so much for bringing us those details. Mr. Chokalingam, your view with regards to where Shree Cement stands, because as Puneet mentioned, second half is a promising quarter for them, and going forward, the kind of capacity expansions that they're taking, going forward, things are looking nice. Do you agree with that?
I looked at 3 more parameters. That is, FY25 was a little difficult time for cement players. So in that year, how these two companies managed their operating profit. When I see that Ultratech managed to keep operating profit intact in FY25 over 24, whereas Shree Cement has not done that well. And second, if you look at the PE multiple also, Ultratech is far cheaper than Shree Cement. Third, even the return ratios are far better for Ultratech. So between these two, I would prefer Ultratech. I would not give too much importance to expansion of cement capacity in the near future, because the whole industry is seeing a lot of cement capacity expansion, and capacity utilization is somewhere around 75% range. So one has to see, how the industry is able to keep raising the realization when the capacity is expanded. So therefore, that would not be a major, criterion for evaluation. Rather, I would give importance to the 3 parameters which I mentioned. So therefore, I prefer Ultratech to Shree Cement.